Hello everyone. This is the pre-market report video for today, April 13th in the Indian stock market, focusing on Nifty and Bank Nifty. Yesterday evening was quite an eventful one, so without further delay, let's get into the topic. Last night, before the US market opening, US Bureau of Labor Statistics released the US Consumer Price Index CPI data for the March month. In simple terms, we can say consumer inflation for both month-on-month basis and year-on-year basis. On month-on-month basis, consumer inflation just increased by 0.1% and it was lower than the analyst forecast 0.2%. This was significantly lower than that of last month's 0.4% increase. Every month for US inflation, I always do this fun exercise. It kind of helps to quantify the month-on-month impact. I mean, if we were to multiply 0.1% by 12 months, it would equate to 1.2% consumer inflation rate for the entire year. And of course, in the real world, it won't happen like that. But I said it to make it easy to understand that how much the consumer inflation comes on for the March month. Then, in terms of year-on-year basis, there too the consumer inflation comes less than what the analyst forecasted. I mean, it's just 5%. This March month data was sharply lower than that of the inflation in February, which was 6%, and January, which was 6.4%. This inflation number is the lowest in 23 months since May 2021. As a result of easing inflation, the US market turned bullish. And thus, all three major index opened positive of near 0.5%. Then comes the Switzerland's parliament decision. I mean, in the late night session, Switzerland's lower house rejected the government's proposal of giving 120 billion US dollar aid package for Credit Suisse Bank merger with UBS Bank. This decision had a negative impact on the US market and wiped all its gain. After that, official FOMC meeting minutes for the March month interest rate decision was released. This meeting minutes revealed that several voting members out of 12 FOMC voting members had considered pausing interest rate hikes due to the regional bank crisis. This kind of motivated the market, so S&P 500 gained its lost ground. However, towards the end of the trading session, after a closer analysis of the meeting minutes, it was discovered that Fed's March meeting members were now forecasting a recession later this year as a result of the banking crisis. This again dented the sentiment and pushed the market down significantly. It was just a roller coaster ride. If required, please pause it and have a look about what happened and when. In the end, Dow Jones ended its 4-day continuous positive closing. I mean, Dow Jones dropped by 0.11%, S&P 500 closed negative of 0.41% and Nasdaq decreased by 0.85%. Despite all this volatility, surprisingly, US VIX was flat. Regarding tech stocks, most of them closed negative. Tesla was the one that got hit by most. Regarding the reason, it fell over 3% after the US Environmental Protection Agency released the new car tailpipe emission rules that are designed to encourage the traditional major car makers to move towards electric vehicle. In terms of oil, last night it increased by approximately 1.5 to 2%. About numbers, Brent crude oil trading near to $87 per barrel and WTI crude oil trading near to $83 per barrel. Before going into the Indian areas and US market, I just want to discuss about the TCS results. It was released in the aftermarket hours at 5:30 p.m. Indian Standard Time. In one simple sentence, results were kind of mixed compared to the expectations. For example, TCS revenue grew at a healthy rate of 16.9% year-on-year basis and 1.6% in quarter-on-quarter basis. Here, most of the analysts predicted that it will be less than 1%, but in the broader range, they predicted 0.6 to 1.7%. So the result comes as kind of near higher band range. And net profit increased by 5% quarter-on-quarter basis. So the main problem here every website's highlighting was that their EBIT margin was around 24.5%, but the analyst expects around 25%. But there are a lot of positives in the results, such as they got the order bank of over 10 billion US dollars. Their attrition rate drops to 20% from 21.5%. In summary, the previous TCS quarterly results weren't impressive, leading to a heavy shorting of IT stocks. Now, the results appear to have improved compared to its last quarter. I consider these results as positive. However, ADR market didn't think in that way I mean, both Infosys and Wipro areas in the US market closed significantly negative, with Infosys area dropped over 2% and Wipro down over 1%. The only positive thing that happened last night was Bank ADR, as both of them closed positive. Regarding SX Nifty, at 3 am Indian Standard Time, it closed at 17,828 after reaching the day's high of 17,930. So it's kind of indicating a flat to negative 20 points opening today. So that's all about the global market. Now coming to Indian market related info. Last evening, MOSPI, Ministry of Statistics, released the India's consumer inflation for the March month. And the data comes as 15-month low value and fell below the RBI's upper target, which is 6%. Exactly, the data comes as 5.66% in March compared to 6.44% in February. The positive thing here is this drop was mainly led by the fall in vegetable prices, unlike the US where it was mainly driven by oil price. As a summary, last night momentarily global momentum deteriorated significantly, but still Indian banks closed positive. However, SGX Nifty and IT stocks looks not good. So will the Indian market defy the global momentum and close positive for the 9th consecutive day? Let's see. Now coming to technical, Nifty forms a medium bodied bullish candle with a long lower shadow on the daily chart with above average volumes. Technically, after a weak opening, the index recovered sharply. From the lowest point of the day, the Nifty recovered over 100 points. This pattern kind of indicates a buy on dips opportunity in the market. So, as long as Nifty trades above 17,700 level, it's likely to move up to 17,900 to 17,970. I mean, Nifty forms the bullish candlestick pattern and made higher highs and lows for the 8th day. And at present, it's trading above the 20-week moving average 17,789, which if sustained today, this will add further bullishness. On the flip side, below 17,700, the selling pressure is likely to accelerate and might push the Nifty to the levels of 17,600 to 17,550. Then coming to moving average and technical indicator, for both Nifty and Bank Nifty in daily chart, as a summary, it's same as last 5 trading sessions, strong buy signal. About options open interest, for Nifty, first from change in open interest. Almost very few call option open interest were added and huge number was unwinded at 17,700. And significant quantity of new put option open interest added at 17,750 and 17,800. It's difficult to make any conclusion based on this data. So from overall options open interest data, 17,800 got the huge short straddle and 17,700 got the maximum nearby put option open interest. So 17,700 is the strong support for this expiry. And the maximum nearby call option open interest is present at 18,000 and thus 18,000 is the strong resistance. For Bank Nifty, based on change in open interest, some number of new put option open interest added at below 41,600 and small quantity of call options unwinding took place at below 41,600. Whereas some new call option open interest added at above 41,800. Again, it's hard to draw any conclusion from this. However, based on overall options open interest data, we can see that 41,000 level will be a strong support for this expiry and 42,000 level will be the immediate resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.